Hey, Ron Janish here. Have one heck of a presentation here for you today. This is pretty much what we're going to do down in Florida at the end of this month. And this will give course members an opportunity to ask some questions. And if you have questions, please present them on the weekend, this weekend. And for everybody else, enjoy the presentation. This is going to show you a lot of answers to questions that commonly people have about the Andrews techniques. It will show you the answers, will show you, does it really work? Does it work historically? Does it work historically mechanically? Anybody can say, gee, I would have bought here, I would have sold there. But, can we get the computer to say that kind of thing? So we're going to do all kinds of stuff. We're going to actually do a lot more than that. We're going to answer some more questions. We're going to say, what have we done in the last year? And what techniques do we use to achieve the results? We're going to look at some of that. We're going to say things about what we will do in the years ahead. In addition to that, we'll also give you some insight as to where the stock market is headed in the next month or the next year, and show you specifically techniques that I personally use today on an intraday basis for entering the market. Okay, I'll show you the exact charts I looked at, exact stuff I used. We'll go from there. So let's go ahead to the next slide without further ado. And the objectives for the last year have been to develop a Forex trading system from the list of signals that we have. And this list of signals is with the joint venture that we are part of, and put the list of patterns into computer code, test them, and improve them. Develop computerized system for the joint venture to use for trading systems using the software. Develop a real dollar track record. We are in the process of doing that, and we will have the same thing going on in the Forex by a company in the south of us, way south of us, that is part of the joint venture on this particular project. And eventually we will develop a business that generates revenue from trading these systems, from using this technology. We may offer it to major corporations, family offices, we'll see. This presentation here will simply show you that the techniques taught in the advanced course can be computerized and work, and a whole lot more. Let's take a look. Now, some specific goals that we had in the last year: find a usable trading platform and database. We decided to go with eSignal and AMI Broker. Put various trading patterns into software. We have an absolute top-of-the-line programmer. He got 800 on his Math GRE. Test and optimize various patterns for Forex. Computerize the better patterns to get results. Develop software that interacts with Interactive Brokers platform. We'll be finishing that up. Find most productive subsets of signals. Improve signals with additional techniques. Whatever it takes in order to have some really good stuff. And those are the three things on the bottom are some of what will be coming in the future. Now, in the last year, we used various things that we talk about in the course: Sandbar, ZF, ZZF, Fake 4, 5X, GPR0, GPR2, EP. We took those and computerized them and tested them out, and show you some of the results of what we got. First of all, one of the things that we have on our team, our development team for the R&D side of the project, is a person who not only learned this technology from Dr. Alan Hall Andrews, but has also posted every now and then on CNN site the forecasts, and they timestamp them so you can actually see when they were put up there and stuff like that. This was the forecast at the beginning of January, looking for obviously a down move, and And yes, it went down for the whole month of January. As you can see here, this is where the forecast was. Down she went January, and then we had a buy signal down here. And this was another one that was posted. It said rally to continue, and we're looking for the rally to continue to the upside. Okay, so this is the beginning of April, looking for it to continue. And we'll see how far we said it was going to continue. Okay, well, here was where that rally was, beginning of April. Rally to continue, and here we go. We went to an important top area. This here was posted on CNN, and this here is just some date we had on there from, I don't know, from something here to the left. Never mind that, it's not really relevant. But what's important is that this here so far was the top area. And as you can see, at the time, the market was up a bit on the day, and this was the value at the time we took this snapshot and put it up on the web. So here's where that was, okay? And now the question is, where is the market headed? Well, where the market's headed is, basis these numerical values here, is down to this line here, okay? And we'll see how it responds to here. And otherwise, if it makes a longer move, we're looking at down here, down the lower right-hand corner, okay? So let's talk about the product development process. How do we decide what signals to use in the software? Besides doing all the stuff on the list, which is what our contract says, what are the signals that we use based upon? How do we improve a signal? And how can we think about all of this stuff in a way that's meaningful to everyone? I'm assuming there are people in the audience that have no idea what all these different things are, also called objective functions, when you do a study on a trading system and stuff like that. What we're going to do is we're going to make this meaningful to you and easy peasy to understand. Here we go. This is a T-bone steak. The T is up here. This is a bone, right here. There's your T. Okay. Now on this side here is the fillet portion. Here's some gristle. Here's some more gristle. Here's a whole bunch of more gristle. And here's a whole bunch of steak. The best part, of course, is this fillet here. So what makes a T-bone steak really good? So if you have to choose between several different ones, well, you look at the amount of gristle and the amount of bone, and if possible, it'd be nice to have that under 10%. Right? You want to have a good portion of fillet, good sized portion of fillet. In respect to the size of the whole steak, you want it to be at least 5%, and if over 10 or 12%, that'd be even better. Okay, you want the fillet steak to be available so that you can have it at least once every 2 weeks, and so that would be at least 30 or so a year. And you want this gristle and bone and stuff like that to be less than 10%. However, if this fillet here is really big, then you can let that size increase. Okay, so if this fillet here was actually as big as this thing here, and this steak over here was over here or something, then you wouldn't probably mind having more of this gristle. Okay, so that's kind of a subjective way of analyzing it, and we'll take a look and see how this applies to trading systems. It's amazing. Here we go. So in this game here, we're playing Find the Fillet, and we can see that there were 320 trades over this 2-year test, and that's 160 a year. Gee, availability at least every 2 weeks. We're doing good. That meets criteria. We're looking for at least 5%, if possible, on the fillet part, when we see here 2.98, not real good. See, everybody's looking over here at this annual return thing, and I'm saying, well, that's good, but let's look at other stuff. And then what's not shown here is that the amount of bone gristle on this one here is about 26%. That's not real good. So we have two things that we really don't like here is this low fillet and the 26% or 30%, whatever it is, on the bone gristle combination. So there's a thing called down draw, and the down draw was like 26%. That's how we get to that. Okay, so we look at this here and we say, wow, the average Joe would look at this and go, wow, look at these numbers, right? And if you think of it like a filet steak, you'd say, maybe I can do better, right? Okay. So this, by the way, is a standard textbook technique taught in the course. Absolutely standard. Textbook, right out of the Advanced Andrews course. Okay, so what are we looking for? We're looking for fillet, and the computer finds these different signals here, and it says short here and out here. He's missed on this big long run here, and then says long here and out here. It says oops, take a small loss, and these are small bites. So they're okay, but we really want something better than that. And so we look at some of the other signals that the computer program took, and we say, okay, it bought here, it sold here. It bought here, it sold here, it shorted here, it got out here, okay, and then it bought here and sold here, and finally it shorted here and bought here, and this was a nice piece of fillet in terms of in terms of the move. This was a good fillet move here. So what we'd like to have is more of these good fillet moves. Okay, so how do we do that? Well, one of the things we do is we do historical studies, and this is a real actual study. And what happened was we got these results halfway through. We're looking at this, and we can see here that, gee, we had 329 trades, and here we only had 139. But the fillet was much bigger here, 1.5 times the size of up here. So this part here, which has less trades, but since as long as it's more than, if I can have steak a couple times a month, I'm fine, right? So it's meets that criteria, and what we'll do is we'll look at, and by the way, what's the drawdown? What's the drawdown? Oh. Well, see on this one here, the max system drawdown was 15%, which is like 15% of the steak was meat and gristle, right? On this one here, 20%. So this one here is definitely better. And what I'll do is I will actually go through these numbers here, because these are variables that we can identify in the system. That's what these different numbers mean. And I will look for patterns that help me to determine which one to look at further. Okay. And over here, what I used was this group here, because this one here obviously was one worth looking at a little further. Okay, so here's a different example. One of the things that we look at when we develop a trading system is we look at the entry, right? So looking at the entry, in one particular case, we had 152 trades, 80 were winners. Hey, more than 50%, looks good. And 427 was the average win/loss per trade. So the average per trade is, so that was good. And this is kind of like looking at the whole steak. And so we looked at that and we said, well, wait a minute, can we take these, using this particular formula, can we break that down? And all we're doing is taking the Andrews concepts. Because what we did is we combined a couple of Andrews concepts and gave us Formula A. Advanced Andrews concepts right out of the manual. And what we found was we brought it down to Formula 1 and Formula 2, and we found that Formula 2 was pretty much gave us losing numbers at the end. So we, and we found that Formula 1 gave us 1309. And 91 trades, 54 were winners. This is 91 steaks every 2 years. Yeah, I can live with that. That's more than that's more than a couple a month. So, and the average winner was 1309. And so we break that down again. And so what I'll do is I'll break that down into two other things. And what I found was that I can just break it down just a tiny bit more. And I found that out of these trades here in the Formula 1, that 28 of them were of a certain type, which the, the majority of which were winners. It was like 75%, 80% winning trades. And that gave us an average of 874. And the highest quality, ironically, was from this other group, and but only half of them were winners, right? But the average winning trade, or the average winning slash losing trade, altogether was 1502. So this here is some really juicy fillet to look for. Okay. Okay. The other thing we like to look for is exits. Andrews was really big on exits, and what he suggested was if you're going to trade long term, what you do is you look for an exit that would also be a good entry for you to go the other way. This enables you to always be long or short. I did it a little differently. Let me tell you what I did. I found two things that I found are reasonable exits, and it was number one and number two. And then when I said to the computer, I says, well, look, I'll tell you what, we're getting in on the same thing, same standard Andrews course textbook stuff. We enter on, and let's just exit on the first one. Take those profits, if we're taking profits, right? And what I found, ironically, was that by doing it that way, we were up 42%, and we're at 104,000 profit on that same test. So that was kind of interesting. So that just illustrates the importance of trying different things with exits. Okay, now building actual systems for trading. Okay, what we did was we started the year developing this particular signal, which uses this particular geometric form, which has been around a very long time. This, by the way, was the beginning of January in the Dow. And this is when we posted the thing on CNN. Okay, and so we tested that out in the S&P in the last couple of years, and we found that lo and behold, winning trades made money. Winning trades made money, right? Long trades made money. Short trades didn't. Okay, and there were a whole bunch more short trades than there were long trades. But in the long run, the winning trades won out, and that was the average. Okay, our test only gave us 35 trades in the last 2 years because we're looking for a specific pattern, and that's about a steak a month. Okay, so we tested out the exact same pattern, and this is textbook, right out of the course manual, something Andrews taught, real easy peasy. And so we did this 2-year study, and we found that we got 317 trades. Hey, that's 3 steaks a week. Average profit and loss 347. Okay, 277%. That's not a whole lot of fillet. But this 45% roughly annual return, that's a good number. Okay, the problem with this one, once again, was that the gristle / bone was over 25%. So we'll move on. What we did was we looked underneath the hood, and we looked at the charts and the trades that it took, and we found some of them were really kind of neat. Here was a buy, and here was a sell, and here was a short, and here was a buy. And this, by the way, is all generated by the computer on the actual trades it figured out was ones to take, and this was a sell. And so we looked at that and said, wow, we missed out on this huge, nice up move here. Maybe we could make some changes, and this nice fast move here, and this nice fast down move here. Maybe there's some changes we can make that'll really help. Okay, so what we did was we added something that's right at the end of the course manual called a GPR, and we added that with that particular pattern. Right? We combined them both. We got a lot less trades. We only got 80 trades over a 2-year period, but still enough. That's more than one every 2 weeks. Right? And it came up with a little bit lower percentage there, and win ratio was up. Not bad. We'd like to see if we can do better. Okay, so we did the test again, And we did it with, um, by adding, we tested it with 3 things that we like to see in the course along with that pattern. So we have the pattern and we draw certain lines and 3 different lines, and we test it out that way and see how well it worked. And that one said, oh yeah, 75% were winners. Whoa. And there was there's 40 trades altogether, which is less than one. That's 1.5 a month. Not as much as I'd like. And about 35% was the annual return, which is a decent number. So, but here's what was surprising: was right here, 15% was filet. Now that's pretty good. So this is worth pursuing. What I did was I kept this because look at this, my exposure. And this is the amount of time that my money is actually working, was only at 10.91%. So what I did was I took that threesome and I combined it. And I tried many different things. I tried the various systems that we brought up. And then we added a long-term component. And we said, well, what about a longer-term component? Because Andrew said, hey, my stuff works better on longer-term stuff. I said, okay. So we did that. We tried it with the long-term component by itself without the 3. Okay, we just add the long-term component to Andrew's pattern for a reversal and fast moves. And we got this one here. I said, wow, this is pretty good, nearly 10% on the fillet portion. This one, winner's looking nice. These numbers looking decent. Exposure 22, and down draw was under 10%, which means the bone and gristle is under 10%. That's not bad at all. And so when we added the long-term component that we just showed you with the threesome, we got a total of 112 trades, which, hey, that's about 1 a week. 1 stake a week. That's not bad. That's pretty decent. And 10.51% is the amount of fillet, and that's a pretty good number. Okay, and exposure now is up to 30.31. So we're using the money 30% of the time. And that's how we developed this particular system. So what's next for Forex development? Well, we're going to develop and test more stops, develop and test more exits, do some real-time simulation, real trading with real dollars. We do that right now. We are going to work with our folks down south and work with them to have an account and them also doing that same thing. And we're going to test some more approaches and develop different additional Forex systems. And that's phase A, the phase we're in now. And now some of it is, then we're going to do some phase B stuff later on. And that's where we're going to utilize intraday and other time frames. I'm going to show you some of that in a little bit. So what will be done in phase B? Well, one of the things we're going to focus on is power moves. This is a cattle trade I actually did not long ago. And we're in the beginning of May now, and this is April. So wound up taking the trade here because this is a standard pattern. I'm looking for a power move. Objectively, to define a power move, it consists of 5 consecutive further closes in a row or a 10% move in less than 10 bars. Okay, so we did not get the 10% move, but we did get the 5. Actually, we got 6 consecutive closes in a row here. Okay, and so I wound up going on this thing here, seeing it was stalling out, let it go, got back in long here, boom, took this right up. Now that was a personal thing I did. It was not using the computer stuff. What we want to do is we want to computerize this power move stuff in phase B. Another example of a power move is the one that we took here. We announced, hey, up we go time. This is a strong move. And we finally had a power move inside here if you define it as 5 consecutive closes, 5 consecutive further closes. Okay, So we had that here. And here's another power move example. Here's one I don't remember what I did back here, but the power move I can see with perfect 20/20 hindsight was right here. Okay, and in this one here, I did go long in this area here, and we had the power move right at the beginning, and I wind up exiting real quick and using standard things out of the course manual, just standard stuff. And beans recently wound up going long that. Down here, we did have the power move, 5 consecutive further closes, and got me out over here somewhere, and wound up going short again here. So now we're looking for a power move to the downside in the beans. We'll see what happens. Wheat, we wound up taking the short side over here, looking for a power move. We finally got that power move over here. Well, what happened was price went from here to here. We pretty much had the 10% move in this area here or something close. And when prices went up to the H line again, textbook entry area on something you think is going to go down a whole lot more, we wound up taking the short side some more and got out as prices hit 462. And it'll probably go lower, but we've already stepped aside out of this one here. Cocoa wound up selling it when prices were up here. Prices did make a new little higher high, went short again, additional contract, and now looking for a power move. We'll have to see what happens. Now this is the kind of stuff that what I just told you about is, since it's in futures we're looking at phase C. But in phase B, we're looking at the basic power move concept, and we're adding some strategies and signals. And we'll do that for Forex. Stock market, what about systems for the stock market? Well, we did develop one system for the stock market, and we found there was a bug in it that we really didn't like, and so we set it aside, and we have 2 or 3. The system we had for the stock market consisted of 2 or 3 systems. We found one of them we really like. It's nice. It seems to make money easily and regularly. The only catch is it's long only. When you have a long only system, you absolutely have to have a good hedging system. And we're in the process of developing that. We'll probably do the completion on that in phase B. So we could also, during phase B, we could also have an ETF model and have all that stuff completed. Now, what we have right now is something that where we use the course methods, textbook, and we tested them out on the S&P. And here's what we found. So, now, mind you, this is, numbers here look really big. Also remember, these are futures that I'm using. So, and these are really short-term moves, and I'll give you some idea in a moment. Numbers are really decent, Filet is nice. Look at the number here, right? Filet is nice, and as long as there isn't too much bone and gristle, it should be okay. What we did was we developed this, what I call an index signal matrix. And what I'll do is I'll look at the pattern in the market, and actually the computer does it now. And as a result of that pattern, we'll be able to initiate a long or short trade on the close, and then stay in that trade for N days with a set stop, and for what I call a fire exit stop. And the historical studies on that have been very, very promising. So we found that trading just the S&P alone is interesting, but there's more to it than that, and I'll show you in a moment. This makes for forecasting possible also for some interesting intraday trading. One of the things that this here is one of our standard things that chart that I might look at for forecasting. So when I have the number above, I'm looking for price to go down a bit, and the numbers below, I'm looking for them to go up. So here, for example, we have 33 and 3, And so looking for a nice move up here, and here we had a 5, and it took a little bit, but boom. All right, and then we're 9 and 4, so this one's looking for down a little more. Okay, and so here's the same concept, and right now at this moment, remember that the other day we forecast the high in the stock market here, right? Put that up out on CNN. I showed it to you earlier. Well, right now what we're looking for is prices to do a power move to the downside and test this line here. And how it responds to this Babson line really will give me a really good idea as to what's likely to happen next, because the next big Babson line in terms of big data, big concepts is way down here in the lower right hand corner. So will it make it to this one here? We'll see. It wouldn't surprise me if it did. Okay, this is an intraday chart. So now remember that I'm looking for prices to go down. This was as of when? As of this morning. So I'm looking for prices to go down. Okay, I've got a 4, a 9 here that I put up here, so it's my kind of rating. And I'm looking for prices to go down. And even though I realize they'll go up, all the way down, and so here's the intraday 60-minute SPY chart. We can see here that yesterday prices went down to the median line perfectly and reversed. Great place to get out, take profits, stand aside for a while. And then they went up and came down here. And if you're really gutsy and you want to go against the overall trend, which is down as near as I can tell, you can probably put something on here. Just knowing that when prices go up, you got to really look at getting back with the trend. Okay. And here's your 60-minute S&P. Remember, here's where you get back with the trend, and prices, boom, right up here, and they went up to here, and this is where we put shorts on this morning, and so we'll see what happens. Remember, our main trend is down, and what else is there to say? And, oh, by the way, you also went short up here, remember? Posted it on CNN. Okay, so in phase B, we're going to combine those little number things and our other technology, or just our standard textbook stuff, and for helping us find reversal points. And there'll be much more product testing. We'll be testing for next day orders. We'll be testing for IB orders. We'll be doing a lot of product development and building stuff for the future. We're also have in mind is some major additional software where we're looking for something that we may acquire, may build on our own, build something for a high performance model portfolio and something for an ETF model portfolio, and we're looking at all this happening during phase B. Okay, now a major firm wrote to us and offered us a solution for what we do in order to make this easier, and this is what they wrote, and they really want to encourage me to start using this solution. Using their solution, I wind up having access to a massive machine that has a whole bunch of software that's focused on machine learning, also known as artificial intelligence. Okay, and the whole idea is that it can look at what we're doing and kind of figure out better ways to predict the future on a regular basis. And that company is IBM Analytics. Okay, and so during phase C, and maybe phase B, we'll be using their technology. Maybe we'll even do it sooner. Okay, so these are some of the things we're looking at building during phase B and C. And during phase B and C, we're looking at improving 50% over what we have now. I think having that as a goal is very realistic, so that whatever we are able to achieve in the Forex market uh, by if we take systems that we have where the exposure is only 20, 30, 40% and add other systems to it, we could probably easily improve 50% over what we have now. And during phase C, we'll be able to go 100% over what we have now. Okay, so that's what we're looking at. I think I've answered all the questions I said I was going to answer at the beginning of this. If you're a course member, please contact me privately, and I'll be glad to answer any questions you have regarding this. If you would like to meet me while I am down in Orlando, contact me. I will have one evening available. And let's see what else. And otherwise, the technology we discussed in this video here is all available in the Andrews Advanced course, and some of it's from the expanded course. So thank you for your time. Bye.